Well, it's been a little bit since this came out, Budget 2024, and since it came out a little bit earlier this spring, there has been a lot of analysis, scrutiny, praise, and everything in between for Budget 2024. Let's get the perspective of small businesses. Joining me now is Christina Santini, the Director of National Affairs for the Canadian Federation of Independent Business. She took time out of her very busy schedule to join us for a chat. Here's our conversation now. And Christina Santini joins me now. Christina, thanks so much for joining me.
Thank you for having us.
All right, so to start off, budget got released last week, quite a large budget compared to other ones, if I might say so. Let's start with the good. What's good in here for small businesses?
Oh, finally getting a commitment from the government to reallocate or redistribute the revenues it's taken from small businesses through a carbon tax rebate. That is something that the CFIB has been pushing for a while. We've been at the forefront of that fight. We didn't want that $2.5 billion that has yet to be distributed and promised since 2019 to just go to energy-intensive, trade-exposed companies, a select few. And this budget stated that it essentially increased the size of beneficiaries tenfold. 600,000 small business owners will get, and medium-sized business owners will get to benefit from the carbon tax rebate. The money should be flowing, and it will go to those who are, Canadian control private corporations who file their corporate taxes by July 15th and have employees. Because I believe the size of the benefit will depend on the size or the number of employees they have. Clearly, we'll be asking the government to make sure it's meaningful for even the smallest of employers and businesses, but it is a welcome announcement. So the other element is a bit more complex and contentious, of course, is with regards to capital gains. So the welcome component of it, because there are some positive to that announcement, is the fact that the lifetime capital gains has increased. It's going up to 1.25. Again, it's something we've been pushing for. It had an increase for quite a while. So now it's essentially making sure that it keeps pace with inflation and that it's maintained its value over time, because it will continue to be indexed into the future. That being said, it came with proposals to increase the inclusion rate, which means that beyond that amount, more taxes would apply. It gets complicated, though, because they've introduced a personal exemption for individuals of $250,000 and a new Canadian entrepreneur incentive. So we're reviewing those benefits very closely, but at first sight, the CEI has a very long phase-in period, so we'll definitely be recommended that it gets shortened and is narrowed. It actually excludes some of the sectors that were most affected by COVID, for example, such as your local restaurants, but a retail store would be included. So we would like to know more about why that is and push for a broader inclusion.
And yeah, maybe we can jump back to capital gains for a minute, because that's kind of been the big thing that people have been talking about in the budget. In terms of its impact on small business, of course, the inclusion rate is going up. Not the actual rate, the inclusion rate is going up. Can you help maybe put that in perspective for us of why that's such an important metric and why small businesses are getting a little bit concerned?
Yeah, so the inclusion rate basically means how much of the income you earn becomes taxable. So often, and this is with regards to income earned through capital gains. And the reason why capital gains is treated sort of differently is one, well, you sort of lose some of the value over time. So if you earn $100 now and for over 10 years at 3% inflation rate, when you sell it, you'd have to sell it for at least $175 for it to be coming out even, right? Otherwise, your investment would have earned more or less better in a GIC or something of the sorts. So if suddenly that's a greater portion of that $75 is subject to tax, you're actually in a loss situation. So that's just the idea of not disincentivizing individuals' investment and taking risk by investing in companies, whether it's in shares, whether it's real estate, whether it's in a new startup. So those are some of the concerns that they have, is that they're taking a risk. They don't know what the return was. It doesn't account for the fact that some of those gains are offset by inflation and the real dollar value is not the same. And so those are all some of the concerns that I think the government will need to speak to and to address in the coming months.
Maybe taking a step back from the budget and looking overall, what are some measures that the CFIB has been calling for that are going to actually make entrepreneurship easier in Canada?
So we've been basically asking for the cost of doing business to go down. The data from our members basically shows that pressure is going up across all lines of business. So the cost of insurance is going up, the cost of gas or fuel is going up, the cost of labor or other inputs are also going up. It's very much like a household. We're all feeling it. You might be feeling it. Everything seems to be going up in price. The same is for small businesses. So what are we doing? We're asking the governments through the various policy levers it has to help curtail those costs. And to, of course, where possible, give some revenue back to small businesses. So in comes the rebate. What we've also been asking on the payroll size is to delay certain payroll tax increases or to provide special rebates for smaller employers. This would offset the cost, enable them to reinvest any fund, if they are able to, into their employees, into their business to continue to grow. So those are some key elements. In terms of new business coming into it, aside from trying to make sure that the costs of operating are lower, for new and existing business, I should say, we're trying to get government to champion red tape reduction and to lower the regulatory burden, because what we've noticed in the last few years is more and more rules, and they're not just taking the shape of regulations. Rules are being instituted into law where previously they were in regulations. They're being put into policy. They're into new requirements for forms, etc. Absolutely respect the protecting public safety and environment. We've undertaken a survey of our members, and about a quarter of all of what they do in terms of paperwork and compliance is redundant. So get rid of that. You're giving business owners back time. You're taking off stressors. You're making it easier for someone to start a business.
I want to ask you about the CEBA loan for a minute, because that's another thing that's been in the news quite a bit, especially in and around January. So the Canadian Emergency Business Account was launched during COVID to give businesses a lifeline, per se, to support them through lower or no operating income during COVID. Where are we with that? And is the CFIB happy with how the program's being phased out?
So we'll always tell the government there definitely are lessons learned to draw from this CEBA experience, I guess. Where it's at right now, so many of our members were able to repay or to get refinancing by the deadline required. I believe we're still surveying our members to find out who completely missed out of the deadlines, but the last survey results we got, which was from a few months back, was at around 6% that says there's no chance, and another 6% that said, I'm trying, but it's going to be really hard, and chances are I'll be trying to pay it off before 2026. So I'll take a couple of steps back, because I realized I didn't give all the deadlines. January 18th was the time to pay it back with capital you have in hand, but provided that they ended up submitting an application for refinancing with the financial institution that they got a loan, a lot of nuances there, then they could have until March 28th. So when we asked our questions, it was between those two deadlines. And that's of those that we found out that, okay, the vast majority were able to access financing and have it paid out, get the forgivable portion. A good portion of them, though, just basically paid their Visa with a MasterCard. Rather than owing the government, they now owe the financial institutions at a higher interest rate, but they got to keep the forgivable portion. So that was a welcome level of flexibility from the government. And what was also welcome was that extension of, if you have at least applied for refinancing but haven't been able to pay it back, you had until the 28th. So that was a show of flexibility. What we would have preferred was an extension of the deadline until the end of this calendar year, but that's not what we had. For those members that are still having issues to pay it back or haven't paid it back, they now have to pay 5% interest on the balance that is owing, and they've lost out on the forgivable portion of the loan. So it means that if, let's say, they take until the end of 2026 to pay it back, instead of having to pay back 40,000, they now have to pay back 70,000. It's not a small amount. So where we keep on fighting are for those deemed ineligible. We want to make sure they have a process for review. Many were told basically you're found ineligible now. And what that means is, even if it was an administrative error, like a typo of the wrong number somewhere, they can't challenge that. So we're trying to ask the government to make sure they have a review process, so that they can maintain the preferential rate in the 3-year period to repay, because if they were deemed ineligible, they have to repay by the end of 2025 rather than 2026. And of course, we're asking to make sure that if someone asks for an extension from a financial institution and all they have is an email, that the email be acceptable. But we haven't heard any feedback from members saying that hasn't been the case. So that's looking promising.
All right. I know your time's really valuable, so I'll just ask one more quick question. So the budget's been presented now. It's going to make its way through Parliament, presumably by the end of the spring. In terms of looking forward, now that the budget's done, that's probably a very big government lobbying point for this for the Canadian Federation of Independent Business. What's next? What do you do next to keep lobbying the government, and what are some of the new things that you're thinking about?
So, of course, believe it or not, we're already gearing up for the next budget. But in this budget itself, there was a lot of things on we will be consulting Canadians, or we will be consulting stakeholders. And the text of the legislation for those, let's say, the capital gains, hasn't been released. So the opinions I shared, our positioning and what we're fighting for, we're going to be using consultation processes and other channels to try to make sure that the terms are more favorable for small business owners and investments in Canada. With regards to pre-budget 2025, those consultations and submissions are usually due in August. So believe it or not, it's a very short cycle for us.
All right. Well, thanks for the update, Christina, and for all your work at the Canadian Federation of Independent Business.
Thank you very much, Joshua.
And that's it for this episode of Political Debrief. Thank you so much for listening. I promise there will be some more frequent episodes coming your way, but in the meantime, please subscribe and follow me on Twitter, X, Instagram, and all the other social media sites. That's all from me for now. See you next time.